Hello, welcome back to Unicorn Investing, and today I'll try to answer a very important question. What is the most important success factor to grow a stock portfolio into 7 figures or more? So I actually posted this question on our Facebook group and offered some choices, and to no surprise, the most number of people voted for the first choice, which is to invest in high quality growth businesses. Now that makes a lot of sense, but that's actually, in my humble opinion, is not the most important. Yes, very important, but not my number one choice. But nonetheless, that's very important, because if we are confident that the business that we invest in still have many more years to grow, at least 3 to 5 years to grow, and also to grow at the same pace or if not faster pace. Better still if we believe that this business is going to grow at a faster pace. That's even better. But at least if we have this confidence that it will continue to grow at least at the same pace, right? That is very reassuring, because when a business continue to grow in their profits, let's say for example, if the profits now of this business that you invest in is making $1 billion a year, and if it is going to grow to 2 billion net profit by next year, or even in 2 years time, the business is definitely going to be worth more in terms of its market capitalization. The business is going to be worth more because it is making more profits. Obviously, it's going to be worth more. The market cap is going to be more. So we will have the confidence that over time, even though there would be corrections, let's say even if the price is now at its all-time high, all right, even if you factor in a 20% or 30% correction sometime in the future, you still dare to stay invested if you have the full confidence that it is going to eventually break all-time high after correction, right? For a very simple reason, because the company is growing in size in terms of revenue size as well as profits, right? So if a business is growing its presence, starting from US, and then it's growing its presence all over the world, obviously the business is worth more over time, isn't it? So we can logically accept that, and it is not difficult to be confident in that investment thesis, right? So that is the basic criteria, very important, basic criteria for investing success. But that is not enough, because why it is not enough? Because if we are not willing to take risks, or we are afraid to take risks, then let's say you have set aside 100,000, all right, or maybe if you have 100,000 of funds that you don't need for the next 3 years, but you only dare to invest 10,000, then how are you going to grow your capital, right? Because you don't dare to risk. So I would actually argue that our investment success very much runs parallel to our risk appetite. And I'll argue that it is actually not up to, because if we really want to succeed in investing, we cannot say that, my least risk appetite not big lah, not big risk. I'm not like people so big risk appetite, so they dare to, like, they are that daredevil, they take a lot of risk. I'm not like that. I have bad news for you, because if you want to get into the stock market and you think that you can avoid all the risks. You only invest when you 100% sure makan one, 100% cannot go wrong, and then you invest already, there's no volatility. Or that somehow you learn some secrets from some guru that before the stock market correct or pull back, every time before the market pull back or before the market correct, before the market crash, you will somehow know, you have sixth sense. You can read some magic formula, and you know beforehand that or time to sell or time to take profit. If that one a champion, champion, I tell you, even God also lose to you. If you think that you don't want to take risks and you want to be so precise in your timing until you don't need to take risks, I tell you, forget about investing. Forget about it. Just keep your money in the bank, right? Keep the money in the bank or buy some bonds, make 0.5% per annum, or buy some bond funds that gives you 2-3% per annum, or just stick to real estate lah, But I'm sorry to say this, that if you really want to grow your stock portfolio to 7 figures, you must be willing to increase your risk appetite. And when I say risk appetite, when I say risk taking, I'm not saying like, you just blindfold and then jump over the cliff, like just blindfold and then jump over 20 story from your HDB. No, sorry, that's not what I mean, In fact, I have to say that, in fact, the greatest risk takers, alright, like for example, those who mountain climbing free solo, they climb the mountains without ropes. You know how many hours of training they put into climbing the same cliff with ropes? You know how many hours of practice they have done? Like this guy, very famous, Alex Honnold. You know how many years he's been climbing that mountain with ropes before he finally climbed it free solo? There are all kinds of risk takers, but the number of hours they put into practice, you have to give it to them. The kind of risk taking that I'm talking about is risk taking with knowledge. You see, risk taking is a mindset. Risk taking is a mindset. And some of you will believe me that when I tell you that your success depends on your mindset. Because why? Because a lot of these investing knowledge or even trading, if you want to talk about fundamental analysis or technical analysis, I've put in many years of work to understand fundamental analysis or technical analysis. And to be frank, it's not difficult to learn, This is not the hardest part of trading or investing. It's not the hardest part. The hardest part is making decision. Is to be decisive, because when the stock market crash, when it corrects 10, 20, 30, even 40%, what are you going to do? Right? What are you going to do? When you see your portfolio, like, wow, crashing, and then especially if you're on the verge of margin call, what are you going to do? Are you going to just freeze? Are you going to sell or are you going to buy? Obviously, you can't buy if you don't have capital, you don't have margin, you don't have capital, how to buy, right? But if you have capital, standing by the sideline, you tell your friend, oh, it crash only, I will buy. You say, when the market really crash, you buy or not? So I know a lot of people, they say, wow, pull back only, I'll buy. Wow, this one drop to how much, I'll buy. And then this one, now you go a bit first, then after that it will come down, then I buy. As if they know the stock market so well, And then there are also people who say, wow, this time go up to how much only, I will sell. Then you go up to that price, also you don't sell. Then after that, finally crash already. Then you see until, wow, drop until like don't know what, nah. Then you sell. So you sell at the worst time, you know, surging that time you don't sell, then crash that time you don't buy, you know, and then when crash you're supposed to buy, you also don't buy, or you know, so we make the wrong decisions. So to be decisive is to make the right decision. Now when you need to go against your human nature, you still do it. Like when it is crashing, you buy. When it's going into an extended rally, if you can recognize it, you can take some profits. No, I never say you cannot take some profits, but if we're talking about managing a position size, then I would say I do agree. Maybe if you really have a permanent holding, if you have a permanent holding, you can sell 10%. 20% when the market is rising and you think that it's going crazy, it's surging to irrational levels, that's fine. But here, back to the topic, risk taking. How to increase your risk appetite. Now I said that your investment returns runs parallel to your risk appetite. So how to increase your risk appetite, especially we are talking about knowledge-based risk appetite. How to increase it? So obviously, I already say it's based on knowledge. We cannot, our knowledge of a stock cannot be just restricted to, last time this price, the all-time high is 900, you know. So now, also 900 already. Jialat. So how? Sell, double top. So our knowledge about the stock must go beyond the stock price. So how to increase your risk appetite? Increase your knowledge of what the business do. Because actually, business behavior is quite predictable. It's not like your wife, no, or it's not like your husband, no, for those ladies listening. Yeah, human beings can be quite unpredictable. The weather up there can be quite unpredictable. And then sometimes we say want to buy, we don't buy. Sometimes we want to sell, we don't sell. You know, sometimes we say want to buy, end up we don't buy. Sometimes we say want to sell, then end up we also don't sell. So our human behavior sometimes is unpredictable, you know, just like you know, your wife or your husband, you know. But business behavior is actually not unpredictable, because a business behavior have to be aligned to their vision and their mission. Especially when we are talking about the greatest businesses, like the likes of Apple, Amazon, Facebook, Google, Netflix, Microsoft, PayPal, Adobe, Zoom, Tesla. These great businesses have a vision, mission, and they have set goals, right? They are consistent with the strategies that they deploy. They are consistent. They have to be consistent, because if they are not consistent, then how are they going to lead their people, right? How are they going to give their customers a consistent product experience? How are they going to give their customers a consistent brand experience? So businesses are consistent, are actually predictable. What is sometimes unpredictable is they may have competition. They may be disrupted. But usually that you can see that coming. It will take some time before it happens, especially if the company is moved, especially if you really can, because for us, we have a lot of information. We have a lot of information accessible to us. We can tell for example, who are Shopify's, or don't say Shopify, say Facebook, who are Facebook competition, right? Who is Amazon's competition? What is Amazon doing now? It's predictable. So with this predictability, if we day in, day out, it's just like your own, you treat it like your own business. You try to understand what are they doing. Weekly, monthly, yearly, what are they doing? When you keep yourself updated with the business developments, you know what kind of competitive advantage they are building. Like Tesla, if you stay tuned with their FSD full self-driving updates, you will know how good is their full self-driving. You will know how advanced years ahead they are in terms of their manufacturing competitiveness. They are able to, and like Volkswagen acknowledged this. Tesla can build, it takes, for every single vehicle that Volkswagen built, Tesla can build 3 Model 3. And so if you know the business so well, you know what is the competition. Even if they miss earnings by a little bit, you know why does it miss earnings, and you know it so well when it is going to beat the next analyst earnings consensus. And that's when you know it so well that you know whether it is whether you should buy when the price is falling. Because you can see that in the next 3 to 6 months, they are going to report better earnings, for example. They're going to beat earnings, they're going to crush the next quarter earnings, because you are able to calculate what is their manufacturing facility. You will know that this new market that they're breaking into is going to generate them new revenues, new profits. You know, because you are staying tuned to every single detailed development of this business. Right? So that's the key to increasing our risk appetite, because when we know something so well, our confidence increases, and there goes our risk appetite. That's when we are willing to risk. If you have 100,000, you are willing to risk your full 100,000, and maybe even more. You can take some margin, some gearing to boost your investment returns. So I hope this sharing has given you some insights on how to eventually boost your investment returns, because ultimately it boils down to your risk appetite, and you can increase your risk appetite by knowing intimately about the business developments of the stocks you are invested in. So I hope you have learned something from this video. I hope you achieve your breakthrough, and be decisive, be resilient, and take big risks. I'll see you in the next video.